Okay, welcome back to our Is It Legit podcast. Peter, happy 2025. How are you?
Good. It's going to be the best year yet,
Uh,
I think.
2025. I felt we should. I think we're getting a lot of questions about what's going on in the market, which is normal. New year, new
Yeah.
me. Do you want to start with some of your thoughts on the market and real estate in general? How you kind of see the big picture?
Yeah. I've been doing some research. I think the market is very interesting. I think it's unpredictable in many ways. I think what a lot of people were hoping for were that the mortgage rates would obviously be affected, right?
Mm-hmm.
So
Yep.
the rates will 100% affect the prices of our market. And I think what happened to the mortgage rates was just surprising because we thought that once the Feds lowered the rates, all of a sudden we'll see that obviously working in the mortgage rates in tandem, right? So like lowering the mortgage rates, but that did not happen. In fact, it rose in December. So I think there's a lot to unpack, a lot to talk about. You want me to start with prices? You want me to start with mortgage rates? What do you
Yeah, I mean,
think?
that reminds me, we had kind of a swing in the rates last year, and then,
Yeah.
like in September, it dropped. And then a lot of activity happened, and then it went back up again.
Yeah.
So, the way I see it, we are pretty much back to where we were in the summertime. How do you see rates changing? I mean, I know we can't predict the future, but what are your thoughts?
Yeah. So the only thing I could talk about is what the prevailing thoughts are around this subject
Hmm.
by experts that I personally trust. And so no one can actually, they can't really predict where rates will go, but we can give our best educated guess. And I think one of what people are saying now is that the rates will go down in 2025, just at a much slower pace than what people originally thought. We thought that there was going to be massive rate cuts, right? Because we're finally controlling inflation. I think, unfortunately, with some of the recent reports, inflation is actually hard to control. It's starting to tick up a little bit, which thus could make the Feds obviously we could stop doing the rate cuts, or we could potentially go backwards where we're starting to raise rates again. And so, to make it very brief, I think what we were hoping for is that we would have a recession. If we have a recession, then yes, we end up getting most likely the government will want us to lower down those rates because we don't want a housing crash for sure. And so, but that recession is like, it's floppy. We don't know where that's going to go. Sorry, that's my
And that's
kid. But
Peter's beautiful,
yeah,
beautiful baby boy.
yeah. So the answer is it all depends on it really depends, but right now it's most likely going to go down. But it really depends on how we control our debt because if we have higher debt, then we're going to unfortunately because Trump is pro borrowing. Unfortunately, because he's pro borrowing,
Yep.
and he's pro spending, right? So what that's going to do is that's going to make inflation go up. What happens if inflation goes up? Well, then we have to raise the rates. And that's kind of what they're thinking. They're thinking that rates are actually, depending on what Trump does, because we don't actually know what he's going to do. It's just what he talks about. But if he does go into this whole spending spree, inflation will then go up. And that whole like expectation of mortgage rates going down gets a little, flimsy, as you would say. But for now, we are expecting a lowering of the rate just on a slower pace than we originally intended.
So I think another question I get a lot is like, what does the Fed rate mean in comparison to the mortgage rate, right? So what are your thoughts on that?
Yeah, so it's a little complicated, but the Fed's rate doesn't actually work in complete lockstep with the mortgage rates, but they can influence the mortgage rate. So it has to do with the banks. It has to do with the bond market, but essentially, Well, and they could also buy mortgage-backed securities, right? So if they end up buying mortgage-backed securities, which is what happened during COVID, basically we're starting to see the market get affected because back in COVID, because everyone was afraid that the market would crash. So people weren't buying homes. And so there was a lot of fear around that. So what they ended up doing was they literally bought mortgage-backed securities. They
Right.
lowered down the rates artificially lower, right? So in that sense, the government can affect the mortgage rates. But then secondly, it really just depends on the federal funds rate affecting it affects the bank's rate, because they have to make a premium based off what rates they get from the feds and also the bond market. So
Yep.
the answer is it influences the mortgage rates, but it's not complete lockstep with the federal funds rate.
Yeah, something that so we talk to a lot of different lenders. We're fortunate to have a lot of partnerships in that way. And one thing that's been a shortcut for me has been the 10-year bond rates.
Yeah.
How they correlate. They're not necessarily the same thing, but they kind of go up and down together. So is there anything else that, like, if you had a prediction, do you know, I mean, it's a hard thing to say, but do you know where actual mortgage rates would be?
Again, this is not coming from me,
Yeah.
and I never want it to come from me, because I am not a data specialist, right? We're realtors who needs to somewhat know what's going on in the market, but it's really what the economists that I trust, like Matthew Gardner from Windermere, he's been accurate.
No, he's a big name for sure.
Big name,
Yep.
really accurate, very data backed. He is saying that I can't give you a number. That's the thing, but it's if I were to guess, it's probably going to be at a good case scenario in the fives, if not low sixes, because we're going to slowly go down. And I say this with a grain of salt, because something could happen, like a massive recession that can cause the government to say, hey, we have to lower rates as soon as possible, or we're going to get a real estate crash. If we get a real estate crash, then we have what we had in 2008. And we do not want that, because our economy is holding on. Like, that's the backbone of our economy, mortgage-backed securities, right? That's like very safe money, and we don't want that to falter. And so anyway, I think we're thinking things are just going to lower down in a slower pace. And I think what our best guess is probably in the fives, sixes, and you never know, could be in the fours is the answer.
Yeah, I do want to touch on psychology a little bit. I know one of the things that we were telling people is that last year, especially when rates hit 7%, that was kind of like the first number. I mean, if you go from 6.8 to 7.01, it's not that much of a difference mathematically.
Yeah.
But I think that you really can't underestimate how people feel, like the emotions about the market.
Yeah.
And the number has a lot to do with it. And if we really hit the fives, I think it'll be crazy, even though it's still like double what we used to see just a few years ago, you know?
Yeah.
And what was surprising to me is I just want to share a quick story about, one of our clients shopping on the east side.
Yeah.
So one of the things that we do, that you and I do a lot, is we run comparable sales. Why should I or shouldn't I pay a certain price for a home, right?
Yeah.
And one of the things that I do, because we have so much data, sometimes it's overwhelming, is I just look at price per square foot. In this neighborhood, that neighborhood, is it Juanita? Is it west of Market? Things of that nature in Kirkland. And I remember looking at a property that I thought was so overpriced in terms of price per square foot. Mm-hmm. And I was like, hey, client, it's just not going to happen. There's no way they're going to get an offer. And we missed out on a similar property next, maybe a football's throw away, down the street, left and left.
Yeah. Yeah.
And that was like at $700 or $800 per square foot. And this one is priced at $900, right? It's a huge jump, and it's sold in like 2 days.
Yeah.
So I think it's going to be very interesting. And it's because the news is always a lagging indicator. I love it when we get questions like this because we're constantly making offers.
Yeah,
we're
we're
out
in
there
it.
negotiating.
Yeah.
So I am excited because I think if it does drop significantly, and honestly, even if it doesn't, I think it'll still be at least a steady year, unless, something crazy happens in the world. So,
Well, can we transition then
Yeah.
to home prices then?
yeah.
I guess my question for you is because you have, I mean, we've both been watching, but you've been, I feel like, more boots on the ground, looking and seeing what's actually going on in the market. And I guess my question to you is, what have you been seeing in the actual market? I'm talking in the wintertime, right? And now January, and you're starting to see, some activity. So what are you actually seeing right now in the greater Seattle and Sonoma County?
I feel like the huge caveat that I always want to make is the east side is kind of in its own world.
Yeah.
What interest rates? In some neighborhoods,
yeah.
it doesn't really matter. And to be completely fair, yes, there's a lot of tech money and new money, but a lot of that ability to just bid at or above list price, because even when interest rates are like 7%, we comp things in Snohomish versus King, it's a completely different story. They're rolling their previous purchase equity into the next purchase as well, which is what nobody's making 3% down, purchases.
Yeah.
It's 15, 20, 30, 40% down. So I think you can't discount that.
So they're selling their previous home to have the
Right.
equity for their
To be able to roll that
That's
in.
usually how, most of our buyers,
And, even then, I mean, payments are so, I think everybody's kind of payment sensitive.
Yeah.
But once you can stomach that new reality, pricing, I think, is going to be very, very important. We're also very fortunate to work with sellers, a lot of sellers who are trusting us to list their homes, this spring and summer.
Yeah.
Because the inventory problem has been constant, so I just looked this up. We're at 1.9 months of inventory.
Yeah. Insane. You want to kind of explain though,
Yeah, so because this was for a home buyer class, right? Yeah. One of the slides that we have is how do we measure inventory, which is a measure of how hot the market is. A balanced market, whatever that means, is 4 to 6 months of inventory. According to experts, that's how long it would take for all the homes to sell out.
Yeah.
So if we had 6 months of inventory, which I think the closest we ever were to that was probably, back in 2008 to 12. That's how many months it would take to sell all the houses. Now we're still below 2 in this interest rate market.
Yeah.
Which is even crazier if you think about the fact that that number is a lagging indicator. So that's December's numbers. I mean, who buys in December, right?
Yeah. Yeah.
So what I do see is that buyers have to be prepared. If the price is right and the condition is good, there will most likely be multiple offers. I'm not saying it's going to be, 100 to 2 to 300K over. I think that's not as common, although
that was like 3%, sub 3% and 3% mortgage rates.
You're just like, oh, I'll just increase my loan. It'll
was
increase
insane,
my payment by another $500. Now, that same increase is probably $2,000 on a mortgage.
Yeah.
$1,500. So,
Yep.
I do see a lot of people waiting on the sidelines. We ourselves have a lot of people that we're constantly talking to, advising on. But I think the conclusion for me is if it's priced right, it's in a good neighborhood, the home is well conditioned or inspected, expect competition. That's what I see.
And typically, I mean, are we seeing like 50 to 100 on the east side? Are we seeing, I've heard of over 100 in Snohomish County, like Linwood recently.
We are definitely beating the previous price per square foot numbers, just to generalize.
Yeah.
I mean, the evidence is out there. We're not setting crazy records like going 20% above the previous highs.
Yeah.
It was a dip. High interest rates just caused the market to, 2022.
Yeah.
Right? May to June. Boom. It just dropped. I don't want to say we're on vacation, but we were just kind of waiting, and we were advising people not to sell, you know?
Yeah.
And then it came back up, and now this has come back up, and then it's kind of a little bump, but people just have to expect that if it's priced well, it could go 5 to 10% over, and it's very, very likely.
Yeah.
So
Totally. So let's talk about what happened in 2024, and then what could happen in 2025. I think that's some really good insight. So in 2024, which is pretty interesting, King County actually had a modest increase. So this is based off InfoSpark, so it's not the most accurate, because they usually have an audit of the numbers, the final numbers. But in King County, based off just the InfoSparks, which is all from the Northwest Multiple Listing Service, that's all very like accurate data. King County actually went up only 2.6%. And most likely what we saw was like the Seattle prices probably kind of went down because the mortgage rates remained elevated. Seattle prices probably went down, but on the east side, with what you're saying, they probably kept it elevated. What happened, I just saw the graph. What happened was that in the beginning, all the way up until so January to like May, you were seeing the prices go just up, right? And then as soon as you hit June, you're actually seeing prices go down because of the rising interest rates, a little bit more inventory, and then rates went down a little bit. And then there were all these promises about rates going down.
I remember that, yeah.
And then the market started heating up again. But then all this news came out recently, right? It's like from the Feds, like, oh, inflation's not being, it's a lot harder to control than we originally thought. We were wrong, etc. Now we're starting to see prices actually go down at the very end. So in King County, it was only 2.6%. But interestingly, in Snohomish County, we were up 12.2%.
So how are we measuring that? Are we like what month to what month? Is it just year over year from 2023 to 4?
So literally from January. It could be December, but it's like December to December, basically.
Right. Okay.
Yeah. December to December. Went up quite a lot.
Interesting.
And I think the reason why, this is just my personal opinion, I think the reason why Snohomish County went for a lot more was because Snohomish County, there's more room to grow, whereas affordability in Kirkland, Bellevue, and some of those areas is just out of question, if that makes sense. So, and Snohomish County is just becoming so popular now. They have good schools. It's starting to develop a little bit more, and it's just, you get more home, right? We have clients, right, looking over $1 million, right? 1.2 plus, and they don't get much on the east side. And that's where most people want to live, not necessarily the Seattle side.
It's crazy. I mean, I was just looking at townhomes that went from 1.3 to 4 to 1.9. And it was like 1,800 square feet to 2,500. And
crazy.
Crazy. It's just, I mean, even me, like we look at these numbers all the time. And we just I just pause and say, is this real? And then I check my numbers again.
Yeah.
I do think that the huge caveat again is all of these are averages. Real estate is so neighborhood and city or district specific.
Yep.
That a lot of people are surprised. Like, hey, I thought it wasn't supposed to be like this. Well, Bothel's right here, Kirkland's right here. You're like the zip code changes within a street, and it could be this way, that way. So I think it's really important to be very neighborhood focused. At least that's the advice that I'm giving, to our clients. Yeah. Like drive around, understand what's going on. If something sells, you go see it. I'm gonna dig through. I'm gonna call the agent and actually interview them because that's part of our process.
Yeah.
How many offers did you get? How many showings did you get? Yeah. How many, and then there's so much we can tell from foot traffic during open houses to, things of that nature. So.
Yeah, for sure. It's definitely interesting to see what's like a lot of this activity, what's going on, and how much of a difference it makes in neighborhoods like Bothell, Kirkland, Bellevue, Redmond are just so hot, and it could totally skew the numbers. Like you could have 20% appreciation. That'd actually be interesting to see, like how much did it go up in Kirkland and like Bothell versus how all of the like versus Edmonds and like Lake Stevens, right? It's like in all these like different areas. So,
And then even further, there's house subtypes, right? There's split levels versus two stories, and a lot of people I think want to just compare square footage.
Yeah.
But the layout, the lot position, I mean, we can talk for days about that, but there's so many nuances to that.
Yeah.
That I think kind of coming up with a thesis is important, but then it's important to challenge that thesis by looking at real examples.
Yeah.
At least, from our experience. So.
Do you want to talk about the 2025 predictions then?
Yeah. Why don't you? So in terms of
what do we feel is going to happen with the housing market this year? Based off our best guess, obviously we don't actually know. But
for me personally,
what do you think?
I'm kind of I cautiously optimistic about the Trump economy in terms of how there was a lot of things happening in the last quarter, uncertainty, elections. The rates actually went up and it kind of stabilized at kind of a higher level, right? I think 6.9 was kind of the average number that I'm seeing. I am hopeful because of the...
With Trump back when he was in office or now?
After he got elected.
Okay.
But it's been kind of, after the election, it's been kind of like 7 this year. It's been floating in this little gray area and just kind of maintaining. And I only know this because we've been putting in offers since the first week of January, right?
Yeah.
So I think post-election for me personally would be positive. Inventory is still a problem.
Yes.
I mean, we just talked about that, 2 months or less. Yeah. And it's gone up 40 to whatever percent, 30 to 45% year over year. But that's going from 1 to 2 months, which is still a super hot market.
Yeah.
And I think a huge thing is sellers can't just sit on the sidelines forever. They've been sitting because of the problem of the move up issue, right? You have to sell your mortgage or your house that has a mortgage of 3%. Now you're going to 6, maybe even 7.
Yeah.
But life happens. Relocations happen.
Yeah.
Health, got to take care of mom. I personally moved my parents from Hawaii to here.
Yeah.
I think there will be more inventory, and me personally, I think it'll be a steady increase. I don't think it's going to go gangbusters, 20%, hit the highest or break the highest record, that kind of thing. But what are your thoughts this year?
Yeah, I think you touched on a few different points that I think would be interesting. Okay, so let's talk about Trump. And again, whatever everyone's political beliefs are, it's like the question objectively is, how is Trump going to affect the real estate market? And I heard Matthew Gardner talk about this, which I thought was very interesting, where Trump is very pro deregulation, right? And so one of our biggest issues,
right.
as you know,
right.
especially here in Washington, is that it is dang hard. They have way too much staff. That makes it so difficult for you to get any permitting for anything, right?
Yeah, I'm in that process right now, actually.
Right. Yeah. You're building a home right now.
It's that is actually one of the reasons why I think home prices get propped up in states like this, because it's so hard to push new inventory.
Yeah.
But yeah, please go ahead.
It's very true. And I think that will help right now. So the main issue, the reason why our prices are so high and why it's probably not going to drop is because we have no inventory. The bigger problem is that our developers, our builders are not building enough inventory. So with Trump coming in, he's talking about deregulation. That could help us build more homes, more needed homes, because we absolutely do need homes. The other thing, the tariffs. I'm sure everyone has seen what's been going on with tariffs, but an interesting point is that we are actually A third of our materials actually come from imports. A third.
Yeah.
Ish.
Yeah.
And we're talking, okay, so let's talk about a couple things here. A third of our materials come from imports, but then these builders, obviously their borrowing costs are going to be more because they have to get more loan, right, in order to build some of these homes because these material costs are now going to be bigger. I mean, I don't know where people stand with this, but what they say is because material costs, because Trump is imposing these very large tariffs, they're saying that they're going to bill that back to the buyer, the consumer, right? And so with a third of, the materials coming from outside, that's probably going to affect, the developers and how much, they'll have to borrow. And then the other thing is labor costs, right? And so they say 31% of the builders' workers are immigrants. 31%.
Yeah, I would agree.
And you know what's going to happen with with how they're fighting against illegal immigrants and this and that. It will affect the building costs, the labor costs, and the material costs. So they are saying, again, maybe they have a different plan around this, but they are saying that because these costs are going up, that builders are not dumb. You have clear numbers. They're not just people who are just making a bunch of money, rich, and just, living on their yachts. No, they actually do have costs. They have to actually run a good project. But if there's no margins, they're not going to build homes. So that's the other side of like, okay, we're going to deregulate, but at the same time, with all these rising costs, that's going to affect inventory again. And then, of course, mortgage rates. I think because Trump is all about spending, and then more spending means more debt means more financing and borrowing, and then this could cause bond yields to rise, and of course that also hurts mortgage rates. So they are saying that, or at least Matthew was saying that, mortgage rates could actually affect Trump's spending could also affect mortgage rates in a negative way, in the sense that mortgage rates could rise. So it's interesting how, again, these are all theoreticals because we don't know what's actually going to happen in the office. He hasn't even taken office, but that is kind of what they're thinking about Trump's impact.
So I do want to mention some things regarding that. So just about the problem. So I just want to mention some bills that we were talking about earlier.
Yeah.
And I think this is important because, number one, we need to know what's happening in our state, in our backyard. So there are two bills, and I do want to get specific in case people want to look it up. It's a House Bill 1110 and House Bill 1337, whatever that means. So House Bill 1110, essentially, long story short, means that the density or how many units can be built on a single lot is going to go up. It's not that simple. Like, you can't just build a sixplex in your 5,000 square foot lot. But assuming you have the right size, the amount of doors, we call them, right? Like a single family has one door, duplex has two doors, triplex has three, and so on and so forth.
Yeah.
How many doors you can build, which means how many units that can house people, and meet their living needs, are going to go up. And a lot of the cities are going to ratify or make that into their own version of the law by this June.
I see.
So why is that important, right? Well, it's important because your value can go up significantly. So I have a good and kind of a sad story, but essentially I got in touch with an off-market person because we do reach out to everybody, right? And this older gentleman, his wife, super nice couple. They, unfortunately, their daughter is, has stage 4 cancer, and they are trying to sell. We call it like an assemblage, or multiple parcels. They're trying to sell 2 parcels in Linwood, like Linwood, heart of Linwood.
Yeah.
And we did a bunch of studies and talked to builders and reached out to everybody. With the previous zoning, we could only build 4 to 5 homes, which wasn't enough to make a profit to be able to pay these sellers what they were due.
Yeah.
But knowing that this bill is being passed, I consulted with Mike Appleby, which if people don't know, he is the land guy in Snohomish County. That all the builders multiple builders will come to him on the same parcel even. I mean, he's like the land guy. Yeah. He works with Chicago Title. He's the guru. Anyway, consulted with him, and essentially we are going to just wait until June of this year when Linwood is going to make that into its own version of the law.
Yeah.
And the density could go from 5 to maybe even almost double.
Wow, like that.
Yeah. So this is all kind of up in the air, because there's a million other things that you consider when you're building units or homes. But if you have some sort of an acreage, I would say even past quarter or half acre in any of these major developing cities, it might be worth it to look how your values will be impacted and what's happening around your area for developments. You might drive down the street and you might see like a white big billboard that says proposed subdivision, because it's all public, right? Yeah. And then to kind of close that off, House Bill 1337 has a lot to do with DADUs and ADUs. So ADU, accessory dwelling unit. So like a mother-in-law, if you make this room have its own separate entrance, add a kitchen and a bathroom, it's a mother-in-law, right? Well, they're also making it a lot easier for cities like Seattle or any of these big population cities to add DADUs or detached additional dwelling units in their backyard.
Yeah.
So you can essentially build a new house without, I would say, like 30% of the red tape that's required to build a ground-up home.
Wow. Okay.
So that's getting into trying to fix this problem of middle housing. We, as a city, go from single family and then boom to big, apartments. We're missing those cottages. We're missing those kind of mixed units, and we're seeing a lot of them pop up. So just a couple of things to keep in mind and really pay attention to.
Yeah.
If you are a homeowner or if you're looking for investment properties.
Yeah, I think that'll make a big difference. I think, first of all, we all know we need housing, and that's why you're seeing these apartment buildings built up everywhere around Snohomish King County, because we just need more housing. Rentals are getting out of hand. It's getting too expensive for people to live. We need more inventory to kind of bring. So I think that'll help solve problems in 2027 maybe and beyond, maybe 2026. I think just to get back into the 2025 market and how that's going to be affected, because I don't think even if there's deregulation and all those things, it's not going to give immediate relief, right, to the people who actually need it, because it takes, a year to get permits.
It takes a long time to get permits.
12 months to go vertical to actually build the home. And so then where will home prices be? Considering those things for later, where will home prices be in 2025? I think it all comes down to two major reasons. Will we have a crash? No way.
I don't think so. No, I don't think so.
What not a lot of people understand is that the reason why we had a crash the last time is because people just borrowed way too much money. It's different now. People have way more equity in their properties, and not only that, that they did a study in 2022, 40% of Americans own their home outright. 40%, nearly 40% own their home outright. So no, I don't see no expert will say, I mean, they're fake experts or whatever, people on YouTube will say that there will be a crash, but there's no indication of it right now. When it comes to the market this year, because we have so with interest rates, I think that even though that does affect the market in that it's more like holding it from going parabolic, just going way up, that's kind of like holding it from going crazy, like home prices going double-digit appreciation. However, I think the market will still go up solely based off there's a ton of demand and there's not enough supply. We're not building enough homes. And of course, there's that landlock, that sellers aren't selling because it's the golden handcuffs. They're not selling because they have sub 3-4% mortgage rates. They don't want to sell that. They don't want to lose their mortgage rates. In fact, the only people, I think Matthew Gardner said that 23.5% of people here have have 3% or lower rates. Mm-hmm. So the only people who are actually selling, most people are, they call it discretionary sellers, which they're not moving by choice. They're moving because they have a death in the family, a job loss, or whatever, right? Those are the people who right now are selling, or they have to move out from out of state. And so, and then here's the other thing, another thing to consider, California, right? Unfortunately, the fact that we have a strong economy here, right? We have great schools. Weather is not as bad as people thought. One of the things that we should consider is that California, however you feel about their government, right now people are disgruntled about how their state is being run. Of course, with these recent wildfires and what happened there, it's making people even more upset about how they're handling their state. Thus, I believe we're going to see Californians actually see our housing prices as cheap.
Yeah. I just had a conversation with somebody who moved from LA yesterday, actually.
Crazy.
Yeah, it's crazy. Oh, it's not too bad.
It's not, which is insane because we are one of the most expensive markets in the whole United States, right?
LA is crazy. It's on another level.
So relatively, yes, we are cheap. And so because now with obviously this, we're seeing homeless, it's bad. There's theft everywhere. It's just chaotic, right? In San Fran and in LA. And so now with these wildfires, this whole water thing, I don't really know the truth about that. Why does the fire hydrants not have water? But regardless of the case, they are they're disgruntled. I believe we're going to see an influx of people from there as well. And so with all of these factors, growing demand, low inventory, prices are still going to go up. And we don't know how fast it's going to go up, but I do believe it's going to be a hot market in the spring. It may taper off, but that all depends on taper off in terms of appreciation, but that depends, in my opinion, on where mortgage rates go.
Yeah, I mean, just a little bit of a tangent here, but I recently went to, I had just had a recent experience with my kids that made me feel really this proud, this proud feeling of being in Seattle. And it's a museum of industry that's in Seattle. I can't remember. It's called Mohai, Mohai. And, when you have kids, you're just kind of searching for stuff to do. You're like, I need to fill in this time and do this, and let's make it educational. So randomly picked a museum. They were closed, so this was my backup option. So we went there, and I ended up getting very, very surprised because this was literally from Chief Seattle, who signed, who got all the tribes to, the chief from Snohomish came, and all these people came and they signed, their land away to the settlers, basically. From that point all the way till now, it outlines the industrious history of our city, right? And the PNW. There's something about maybe it's the cold weather, maybe it's the fact that we don't have any sunshine, and that forces people to work hard. But there's been so much innovation and so much hard work, which is really bringing a lot of jobs. Yeah. So that's kind of the whole point of this point is once you have industries that continue to innovate, I mean, we know about, the Starbucks, the Boeings, the Amazon, all that. But there's also all of these companies that, like Sonicare was started in Seattle, which I didn't know. Or the first heart stent that you make when you have a clogged artery was apparently made by like a Boeing engineer who got fired or something and was bored. He's like, I'm going to invent something. So it's like there's certain industrious energy I think we have, just like San Francisco or New York. And I think that if we have jobs, so Snohomish County, for example, is slated to have almost a 50% increase in population by 2045. I might be wrong on the exact numbers, but this is a real article. You know, people can look it up. We're at 800,000 people plus.
Oh, gosh.
Already.
That sounds...
Traffic's terrible. I mean, forget Lake Stevens, Trussell.
Yeah.
There's Smoky Point. I mean, we can go on and on, but there's a lot of, I think, positive momentum that we have.
Yeah.
And because we have a lot of jobs, people will continue to come from California.
Yeah.
You know, so on and so forth. So that was a good reflection moment. It made me feel really proud of, you know, kind of being here. So anyway.
I think it's great to live here, and people are going to find that out, I think, very soon. Some last points, and I think we should close out here.
Sure.
I think some last points to consider, I think very noteworthy things are RTO, Return to Office by Amazon.
Oh, sure. That's a hot topic.
Another point that's going to increase in my opinion, our prices, where, you know, a lot of people left to Texas, cheaper Florida, all these areas because they were fully remote. Now they're requiring to at least go hybrid or to come into the office 5 days a week. And what that's going to do is that's going to bring a lot of people back into the Washington housing market, because a lot of these guys, they want to be homeowners, right? What Matthew Gardner said that was really interesting was we might see, because we saw the condo market in both, you know, the east side and Seattle greatly affected. Like, it didn't really grow. It didn't really appreciate. And I think the reason why is because a lot of people moved out of some of these urban areas, right? Because why? Why do I have to stay here? I'd rather live in Linwood or Lake Stevens, or I'd rather, you know, live in, you know, not Los Angeles, but a cheaper area, right?
Yeah, Port Angeles.
Port Angeles, somewhere. It doesn't really matter.
Yeah,
and
other places, sure.
But that is all changing because now Amazon just announced their RTO, the Return to Office protocol, and now a lot of people are going to start flooding into close to hopefully work, which are going to be condos. So we might actually see a bigger uptick or a bigger appreciation gap, a margin for the condominium market in some of these more urban areas next to Microsoft in, you know, Redmond and the east side, and next to Seattle as well. So that is pretty much it. I think, unless you have any other comments, I think we should.
What's your biggest goal for 2025?
My biggest goal would be, I mean, obviously to be a good father. That's number one.
How do you become a good father?
I'm going to find that out. I'm going to find that out.
Teach me if you find out.
You with two kids. I think I do have major goals. I'm in some ways I'm going to finish my book. I've been working on a book for a while, and I really do believe in the concept. It's going to be about baby steps, and then I'm going to be doing workshops actually in kind of a follow-up for my book to actually make changes in people's lives. Like, if we're saying that we want to get out of debt, we want to get debt free, and we want to invest, do all these things, like, I don't want to just keep saying it because it makes you feel good to say, I want to actually do I'm going to call it like a do shop, because we're going to actually do something about it, and we're going to do it together, and we're going to suffer together. And hey, if we have to go do car washes, you know, every weekend until everyone's debt's paid off,
whatever it takes.
You see what I'm saying?
Whatever it takes.
And it's better to do it within a group than to do it by yourself. So that's
all right.
Some of the things.
I'll be sending my 7-year-old to your workshop because he needs.
There's a minimum age requirement, and it's 80.
No child labor.
So
okay.
no child. So
all right. No, that's a good note. Yeah, maybe for next time. But that's it for me. So
okay. All right.
Okay, guys.
Thanks for tuning in, guys.
I don't know what I'm looking at. Looking at everywhere.
Just look at me.
It's difficult to look at you for too long.
Okay.
I have feelings.